You may have heard of the terms Obamacare, ACA, and the Marketplace. If you are self-employed, this video is for you. I am going to break down what these terms mean and also compare ACA or Obamacare plans with private health insurance plans. My name is Brady. I am a licensed health insurance advisor that works with Bay Insurance Group. We help people that are self-employed, that would be a private contractor or a small business, get health insurance for themselves, their family, or their entire business. You can learn more at bayinsuranceGroup.com. So let's talk about what ACA is. ACA stands for the Affordable Care Act. Many people also still call it Obamacare. The ACA was introduced in 2010 to help people get health insurance if they had pre-existing health conditions, cannot afford coverage because of lower income, or work for an employer that does not offer health insurance. The Marketplace is a website where people can go and shop health insurance plans that are ACA compliant. Most states use a website called healthcare.gov. California calls it Marketplace Covered California. New York calls it Marketplace New York State of Health. These are all different names, but they serve the same basic purpose. They help people compare and sign up for ACA plans. ACA can have great pricing if you have a lower household income because you qualify for something called a government subsidy. A subsidy is money from the government that lowers your monthly insurance payment. The amount you receive is based mostly on your household income. This is where self-employed people need to be careful. Let's say you expect to make $60,000 and you sign up for an ACA plan and you put in $60,000, but then your business does better than you expect and you make $100,000. When you file your taxes, the IRS compares your estimated income with what you actually made. If you receive too much subsidy money, you may have to pay some of it back, and it could be several $1,000s. This can be a problem for business owners because their income changes from year to year. Now let's talk about private health plans. A private plan is health coverage you buy outside of the government marketplace. These plans do not have government subsidies, and it doesn't matter how much you make. You could make $50 per year, you can make $50 million a year, and it doesn't affect your rate per month. Most private plans ask about your health before approving you. This is called medical underwriting. Because the plans mainly accept healthier people, this can help you keep the monthly costs lower and actually give you better coverage for your money spent. However, not everyone will qualify for private insurance if you have some sort of pre-existing health condition that could prevent you from qualifying for one of these private plans. In that case, an ACA plan may be a better choice because marketplace plans must accept people with pre-existing health conditions and cover their treatment. But if you're healthy and you don't qualify for a large subsidy, or let's say your income fluctuates a lot, typically a private plan is more suitable, especially if you're healthy. The ACA was really put in place so everyone could have an opportunity to have healthcare. Even someone in poverty that makes $25,000 a year and has type 1 diabetes, they can get approved. At Bay Insurance Group, everybody that reaches out to us, we'll be honest with them and let them know up front whether it's better to go ACA or private plans. If it's ACA, we'll point them in the right direction and tell them what to do. If they qualify for private plans, then we can book a 15-minute appointment and go over some of the best options that fit them according to their age and their health and their income and some other things, especially their own preferences with doctor networks and things of that nature. Thanks for watching.